The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Aloha from TFNN. Welcome to the February 7th wonderful Maui Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Hey, if you can't dial in, you can always let your fingers do the walking. You can send me an email, steve@tfnn.com. I'll do my best to get to that. And, of course, inside the Tigers Den, well, any ping will do. So live from Maui, this is wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we have the Dow trading up 127 points. S&P's up 4. NASDAQ 100 down 0.8% or off 54 points. Russell is just flat at 1507. Semis are down 18 points out here. You've got gold is off 1160, trading at 1317.90. Lead the charge here to the upside dollar-wise. It's Ultimate Software up $21. That's up 9.5%. Wynn Resorts up $12 or almost 7.5%. Arista Networks up $11 and change. Weight Watchers gaining weight today, up $10. That's 16% to the upside. She's trading out at 73.33. Chipotle to the downside, leading the charge off 11% or $32. Google is back $22, so that's a culprit inside the NDX. What's down 2%. Amazon also down $18, a little over 1%. AutoZone down 14. Of course, I want to look at what you want to look at. The first request was to go take a look at the GDX. Now, you just have to, just like yesterday, bear with me just a bit because of some delays that we've got. But nonetheless, you and I will be able to get through it. I think today will be just a little bit better than yesterday. I'm going to go ahead and post the chart here. So if you're inside our Tigers Den, it's going to make it very easy for you to go ahead and download. And the first chart with regard to the GDX, I'm just setting things up right now so that you can grab them. When I say grab them, take a look at what the market profiles are. And what I would be doing as you're watching the charts here is I would just be looking at the lines, the red, the blue, and the green line. And off to the right, you're going to see numbers. Those are going to be your TAS market profiles. Daily, which is the left-hand side panel, weekly, which is in the center, and to the right is going to be the monthly time frames. So, and as opposed to taking a look at what's inside the box, because it always depends on where my cursor is at with regard to what it might show for the top, the center, and the bottom. So just use the lines and the figures on the right-hand side. So here's what we know about the daily and the weekly right now. We know that price is below support, support being the bottom of that box. In the daily profile, I'll just simply go ahead and I'm going to use the word expand this up. I'm going to go ahead and repost that chart just so you can see the daily out here, because this is what we're going to go ahead and look at. And so we can see that this was a bullish structured box, and on the trading session of February 2nd, price closed below that bullish structured box, center line closer to the bottom, so a significant level of support was breached. Now, where is price coming down to? Well, on the weekly chart, price is below the bottom bits box as well. So where the GDX is headed to is its swing point. That swing point is December the 12th. The low is 21.27. That is in play. The high is 21.46. Price has not gotten down there. That swing point has volume of 34 million shares. Today you've done 20 million. So it's moving into that area with volume, into that swing point, albeit there was a break to the upside on the very following day. That was December 13th. That had 82 million shares. So in one sense, you're pulling back into a breakout area. That's really all that means. The swing point is like what Tom likes to say, is where the market talks, walks, and squawks out here. And so where's the GDX headed to? At this stage, you've got to say it's at December 12th level, 2127 to 2146. Of course, it's all going to be about gold, or gold and silver out there for that matter. If I take a look at the monthly chart for you, though, with regard to the GDX, and I'll go ahead and post a larger version of that, what you're going to see is, in essence, this really has been just trading sideways. There's a question in the dentist: are we still long the miners? And the answer is no. All of our mining positions have been closed out. Am I looking to get long the miners? I am. Or am I looking to get long metals? I am. Longer term, I believe that the bullish scenario is still in place. What's it going to take? Well, what it's going to take gold priced in euros. I'm convinced of that right now until I can see or find something better. But it's going to take this chart here. This is gold priced in euros to start moving higher. You can see at this stage, it's just really been wiggling. It's a daily chart out here. It's just been wiggling around its swing point from February 2nd. And if it closes below that level with any kind of conviction that says gold is going to continue going lower. Well, if we go take a look at gold, let's try to do that out here. Where's a chart that I can look at for gold? Be careful what you ask for when you're working with a new system out here. So here's the gold contract. Let me add a couple of things to this before I go ahead and post it. I'm going to try to add the market profiles for you. But you see, it's trading at 13.17. What you and I are just simply looking for is where is supposed support. And this is the problem. Oops, there we go. Just give me a second here. The supposed problem, depending on where it closes today. So here we go. We're going to post the chart for gold. And what you're going to see is right now today it's flirting with the bottom of its weekly box. Now, you can't see that number on the right-hand side. I'll give it to you. It's 13.1940 or 13.17. So here's how you put this together. If gold closes, again, it's a weekly profile. The week is not over. Nonetheless, you close below that level, 13.1940, and gold price in euros continues to move to the downside. Which direction do you think gold will continue to trade in? And therefore, the question will be, what direction do you think that the miners will also trade in? So look, with regard to what the GDX is doing, the Nugget, any of those with regard to what gold is doing, they're really still all in sync, albeit perhaps coming back on a little bit lighter volume out there. So that is the metals. Hey, how about that U.S. dollar index? We take a look at that U.S. dollar index here. I'll post a chart for you on that as soon as I can find where I put that chart. Give me a second here. We'll see if we can get this in before the break, and if we can't get it before the break, we certainly will be able to get it after the break. Are we going to be able to do it? Are we going to be able to do it? I think we are. Give me 1 second here. Here's the chart for the U.S. That didn't work. I got to do it again. That didn't work. I wanted to get you the chart for the U.S. dollar index. Bottom line here, with regard to it is going to continue to move higher. It has made its bottom. When we come back from this first breakout here, I'll show you why. You go to TFNN. We'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're talking about the U.S. dollar index, and it has formed what looks like a major bottom at this stage. And I'm going to go ahead. I guess I should have done this during the break. I forgot that my charts don't post live here. So I'm going to go ahead and complete an A to B equals CD pattern. We're going to go ahead and post that into the Tiger's Den just here momentarily. So here is the A to B equals CD pattern out here. And very clear. And what you're always waiting for at the completion of any pattern, in this case here, one that is moving to the downside, you're always waiting for some type of bullish reversal signal. That's going to be your first indication that the pattern has completed. In this case here, the U.S. dollar index made more than a 1 to 2 A to B equals CD. Remember, we use these as guidelines, as areas where price is going to head to. The real key here, I'm going to go ahead and get rid of the A to B equals CD pattern, and I'm going to go ahead and repost this chart for you so that I can show you there's really two elements to the completion of the pattern, as far as I'm concerned. One of those is that bullish reversal signal. And some of you may look at this cleaner chart and see a hammer candle. That hammer candle, by the way, comes in on the date of January 15th. Now, January 15th, that would have been the completion of one of the extensions of the A to B equals CD. Here's the deal. Here's the problem. What price was never able to do was get above Stevie's red line. So if you take a close look at that chart, you'll see that Stevie's red line contained price. That means that any bounces during that time period, that was resistance. Well, what took place a couple of days ago, when I say a couple of days ago, I'm referring to February 2nd. That was on Friday. That was when you had that bullish engulfing candle. You also had a TD setup that took place. No, a TD combo count. That is the red 13 that you see. That was the prior day. That was Thursday. You can also see a TD sequential. That's a blue number 13. Both of those are also bottoming type signals out here. And then there's a requirement with regard to where price needs to close above the session 4 bars prior to the exact bar that you're looking at. But really what you also have there as your signal is, does price close above Stevie's red line? And the answer is it did. And so the U.S. dollar index has made a bottom. Now, it's made the A to B equals CD pattern. So let's go take a look at it. And every A to B equals CD pattern has at least 4 outcomes. At least 4. If it's a Gartley pattern, we like to say it has 5 outcomes. So let's go take a look at where those 3 outcomes are, because this will assist you in understanding where either the bounce or where the next move is going to be inside of the U.S. dollar index. That means the euro's getting weaker. That means that gold has a possibility out here that you now. Did this? Hopefully, this chart here posted. I want to see if I can figure that out. Make sure that it did. I think I can do this here. Yeah, it did. Okay. So now what you're looking at is my E-signal chart here. And from the E-signal chart, this is showing you the entire A to B equals CD from the high to the low. And then what you're looking at is nothing more than some Fibonacci retracements. So those become levels 1, levels 2, levels 3, and then level 4 of any A to B equals CD is 100% movable move. So where the U.S. dollar index is headed to next is $90.74. You're at 90.23 right now. I do have a little bit of a delay, 10-minute delay here, so my number's going to be off just slightly. But 90.74 is where some people may get off of that elevator. In other words, you start to see some type of a pullback. The only way that that doesn't happen, or one of the ways that that doesn't happen, is you hit that level with a wide-ranging bar. Markets don't end on wide-ranging bars. We don't have that just yet, although today's bar looks pretty healthy. You'll just watch what kind of bar forms as price gets to 90.74. The more likely outcome for the U.S. dollar index is for it to head to the 92.27 level. So if my theory about Goldilocks is correct, we're going to start seeing, we should start seeing gold priced in dollars, gold priced in, or at least gold priced in euros start to tick up. It doesn't help with gold actually falling in price out here. So, we just have to keep our eye on everything out there. When I say on everything, the U.S. dollar index, the price of gold, gold price in euros, and we'll just simply go from there. Now, I don't have any questions, but I would imagine somebody is asking the question, Steve, well, what's your take on the markets? What are the markets doing out here? So let's do this. Let's start by not what my take is, but let's go take a look at what the market breadth is inside of the S&P and inside the NDX 100. So let's start with that. Let's start with the NDX 100 since that is having a time of it right now. And what we're going to do, I'm going to go ahead and post it again, the 60-minute market breadth for the NASDAQ 100. And what you're going to see is just slightly, you have 31 individual stocks that are trading above the top of the box and 35 below. And just really within the past 10 minutes or so is where we're seeing that potential for this negative cross. If we get this negative cross, then what it would suggest to me on a 60-minute basis is the counter trend move is over. Now, we have to go to a 60-minute chart to take a look at where some levels of support are, because that's really the key. So on the 60-minute time frame, because all the other time frames inside of the NASDAQ 100, I believe all have bearish crosses out there, whether it's the daily. Let me just check in here on the weekly. Yeah, on the weekly. So all time frames. If the market is going to form some type of a bottom, then the very first place where you're going to see the bullish cross, as we did at about, this was at 2 p.m. on February 6th. What is today, the 7th? So that was yesterday at 2 p.m. was when you had your bullish cross. You had a bullish cross. Then you also saw at about 3 o'clock the market move to the upside inside of the NASDAQ 100. So right now, things are on the precipice. So let's do this. Let's go do the next thing out here. The next thing being taking a look at the 60-minute profiles. In fact, let's do this instead. We'll come back to that. But let me see if I can actually go ahead and put in the NQ, and we'll take a look at several different profile levels so that we can understand, what's going on. Okay, that's not going to help you. You have to type in the correct symbol. Otherwise, you get gibberish. Gibberish is very hard to actually deal with. So, all right, I'm going to post in the den. I just need to clean this up just a tad so you guys can actually see it. Oh, come on. Go ahead and populate. There we go. So populate. Put in those TAS profiles for me. Yeah, okay, good. So this is going to be perfect. So we saw that at the precipice so far with regard to the TAS market breadth. You're going to see this next chart post here just in a moment. Again, watch the numbers on the right-hand side in the price area to identify your profile levels. What you're going to see inside the 60-minute time frame is you're going to see that its box, I'm going to tell you exactly what it is. The bottom of its box is 6609, and we're trading at the 6602 right now. We're trading right into a level of support. On a 240-minute basis, we're also trading right into support. That is at 6592. So the NQ is really at a point of support. that a support. We'll give the larger time frame, the 240-minute, we'll go ahead and give that the level, the key area to be watching. So we know that on a 60-minute basis with regard to market breadth, it's very close to, hey, which way does this want to go? Is this bullish? Is this bearish? With regard to market breadth, we know that it's very close. So here's what you know. The key level, 65.92.20. The NQ holds that. Then it says the counter trend move, or the bottom that was put in yesterday, that prices are going to get ready to move higher. And move higher to where? You'll watch 67.33. And if price gets above that, it's all the way back to 68.83 for the NQ. This is Steve Rhodes with TFNN. Give me a call. Send me an email. Send me a lifeline. You don't need to send me a lifeline. We're in Maui. Life is great. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
An email that came in from Tom. Tom is asking, he went long the TVIX late yesterday afternoon, 761, wondering what I think that he should do, continue to hold, take money, run. What should he do? Tom, let me answer the question by telling you what I believe that the spot volatility index is doing. Because remember, in the TVIX, and right now with my system so slow and really not having easy access to multiple screens, it's very hard to do this. But inside the TVX, you need to know what's inside that. What I believe is inside that is probably the February and March futures contracts, either or both, and some waiting. And so that, in essence, is really what it's trading at. Here's what I think, and so that's why it's a little bit more difficult. So I'm phrasing that, or I'm framing that, because anything that we trade, especially if it's ETF related, you've really got to know what is inside. What are the underlying components there? And therefore, I'd really have to do a much more in-depth review. But here, to the extent that you're going to pay attention to the spot volatility index, which is trading at 25.76 right now, it's down 14%. Remember, when the spot volatility index has a one-day rate of change greater than a plus 10%, that's an indication of a bottom or a bounce inside the S&P 500. When you have a one-day rate of change that is less than minus 10%, so minus 10% to anything below that, right now we're below that at minus 14%, that can be an indication of an initiation move to the upside. So watch where that closes today, because if you get a one-day rate of change less than minus 10%, that's telling you that the S&P 500 should continue to trade higher and likely put in a major bottom yesterday or 2 days ago. Now, I'll go back and go through that. Where the spot volatility index is going to get to, it's going to get below its futures contracts out here. Everything is going to get back in line. So, what I mean by that is, if you look at my post, you'll see the spot volatility was 25 and change out there. And you can go all the way out to August and take a look at what it was trading at, somewhere around $18.09. In fact, if you start taking a look at, other than February, we're at $21.95. March, you're at $19.17. $18.68 the following month. $18.35, $17.80, $17.90. That has to be dealt with. And the way it's going to be dealt with is the spot volatility index is going to get back in line. It's going to get back below those levels. It's just going to happen. Does it have to happen? Suppose it doesn't, but it will. You know, I can't give 1,000% certainty. But what I can give you is 99.9% certainty. How about that? Would you take 99.9% certainty? So the spot VIX index is going to go ahead and fall. That means February contract is going to also get in line, and it's going to be less than the 1945 at some point in time. So it does sound to me like probably staying with the TVIX, although I hate that vehicle, is probably the right move. Now, if you're wondering where's the spot volatility index headed to next and the levels to be watching for, it's going to head to the top of its Bollinger Band, which is at 1723 right now. You're at 2578. So it's got a long way to go to the downside. And if it continues to go to the downside, here we start to see those minus 10%, something less than minus 10%. Now, that's element number one. Why is it that Steve-O could possibly say that what the markets have done here, that have formed a nice bottom? We touched on it yesterday. And yesterday, one of the things that we looked at, when you're looking at this chart, well, you can't look at it unless I post it. Hello? So let's go ahead and do that. Oh, we've got John in New York calling, so we've got to go to John first. John, thanks for calling. Thanks for holding. How are you today? Do we have John in New York?
Me?
Guys, yeah, there you go.
At what price would you buy VDE? It's a Vanguard Energy ETF.
Okay. And this is tracking what? Do you know what this is correlating? Is this like correlating the XLE by any chance, the energy sector?
I think so, yes.
Any additional information? Excuse me?
I think so. Well, it has SLB also, Schlumberger, so it's like anything energy related.
Sure, okay. And what's your time period? You know, you're looking to get in on this. What is your time frame horizon, your trading thoughts in this? Tell me what you'd like to do. So make it easy.
Maybe 6 months.
6 months. So kind of a longer term standpoint, intermediate term standpoint is what we'll go ahead and call it. So right now your trading looks like at 94.50, and the volume in this is about 1.8 million shares. So it's moving back with some volume out here. And the monthly doesn't, if I were going to give you a price on a monthly basis, I would say this is going to head all the way back into the August 21st area, 83.60 to 85.87. That's based on the information I have right now. That could always change tomorrow or the next day. But right now, is what you're asking for. It looks to me like that's where it wants to pull back to. If I put up the, I don't think I posted this. I'm going to just go here and post this chart. That way you can see what I'm looking at out here, maybe to make it helpful. And here you've got 3 different time frames: daily, weekly, and monthly. In the case of the daily time frame, price is below support, which was at 101.71. It's below support, which is 100.46 on the weekly time frame. And the monthly says this could actually move back to about 85.66 to 89.38. That's what I would be looking for. Now, John, to the extent that this trades, I guess one of the questions we would want to answer for ourselves is, what is light sweet crude doing? Because that certainly, I would think, is going to go ahead and impact the energy sector. So if we take a look at light sweet crude, I'm going to go ahead and post a chart on this for you, and we can see that this is clearly pulling back. And if we say, where is this pulling back to, the first place that I would target in light sweet crude would be about $60, and the second place would be about $57. So I think you have to use the figures that I gave you for VDE, and then what I would do is I'd also be watching light sweet crude, and that's my take at this stage. But what other questions do you have maybe from what I shared with you?
Is that a bearish engulfing on that red?
Which chart were you looking at? Was that the light sweet crude?
The chart you have on the screen right now.
I don't know which one that is. Shoot, I think it's the last chart. So it is not in light sweet crude. Today's candle is referred to a bear sash, and what a bear sash candle is, just that. It is a bearish candle, but it doesn't require you to be in some kind of a trend. This is already a trend to the downside with regard to light sweet crude. And we say that because this thing topped on about January 25th, and it's been trading lower ever since then. So bearish engulfing, for that to occur, John, there has to be a trend to the upside. So the bearish engulfing piece of it is the fact that now it's suggesting to you that price is going to continue to move to the downside. A bear sash candle is just as important, but you have to be careful because of the trend. But what it does tell us is that light sweet crude should continue lower, and I'd say $60 to 57 is its price area and its target levels.
Okay.
All righty?
Thank you. Thanks.
Oh, you bet. We're going to head to break here, folks. You too can get in on the action. You can give us a call at 877-927-6648. And if not, I'll find something to chat about. Steve Rhodes with TFNN, live from Maui. Maui, Wowie. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Back up, folks. So let's go back to the chart where we had the S&P 500, we had the trend index reading, and we had the ratio between the spot VIX index and its 3-month counterpart out there. So I'm going to just simply go ahead and post that back into the den. That way, we're all simply following along on the same chart out here. And here's what I want you to notice. You can go back and you can test this out as well. The market makes, when I say the market, the S&P 500 makes major bottoms when it does the following. When you get these two signals at the same point in time, and if you take a look at those green arrows, and I don't have everything kind of lined up here, but you go back and take a look at, as an example, June the 24th of 2016. And June the 24th, 2016, give me a moment here. Let me get my data window so that I can actually give you. So the reading here on June 24th for the trend index, where it closed, was 2.18. And we're always paying attention to closes that are above 2. What we like to do is combine that to the 3-month spread, between the 3-month spread and the spot volatility index. And levels that get above 1, and by the way, the closing price on June 24th was 1.08. And trust me, when the S&P 500 made that bottom, there were people that thought that the moon, that the sky was falling, that the world was falling apart, that the market was crashing, that, you know the story. You know the scenario out there. Now, we had another instance that took place where we had a similar setup. It is marked by a green arrow. And it's back on April 13th. April 13th, this is 2017 now, and you can go back and find lots of instances of these where the trend index reading was 2.42. Okay, you got to close above 2. You also had the ratio index 1.01. What happened there? Marked a nice bottom. Now, fast forward to a few days ago. A few days ago, during the so-called crash, we have to find some type of a nickname for it. You had the trend index reading at 3.60. I know what we could call it. We can call it a major bottom. Yeah, let's call it that next major bottom inside of the S&P 500. Because you get a trend index reading of 3.6. You get a reading of that ratio of 1.33. Folks, you got a major bottom that has just formed inside the S&P 500. Until proven otherwise, that's what we have going on in the market. So watch the spot volatility index today, because what you like to see coming off of bottoms, what you love to see are initiation signals. And what's an initiation signal? We talked about that. That's when you see that spot volatility index close somewhere south of minus 10%. And as we speak right now, it's 1:45 East Coast time. It is not 1:45 here in Hawaii. But at 1:45 East Coast time, you've got the spot volatility X down minus 20% out there. So the answer is, or the conclusion is, that what the stock markets have done have just simply made a major bottom. Does that mean it's time to get long again? It means you can, or you should start thinking, or you should start adding. And you should take a look at what took place, whatever caused it. You just simply take a look at it as a gift horse. And you don't like to look a gift horse into the mouth. Okay, let me just take a quick peek, see if anybody has emailed me, see if their fingers were doing the walking out here. So, Tom, that was really for you. I hope that that helps you out. We've got a request out here from Ken, and Ken is looking for an entry point into Apple. So let's go take a look at Apple. Let's go first do the 3 time frame gig out here. And for the 3 time frames, we're going to go ahead and put in its ticker symbol, and then I'm going to go ahead and post this so that you guys can view it. This is what it's going to give us. So this is going to provide us with our market profiles. Again, in using these, because of the way that I post this, is don't pay attention to the data boxes. Pay attention to the levels on the very right-hand side. And what we're going to see here, you're looking for an entry point. Now, here's the issue, Ken, with regard to Apple. And we'll go back, and I'm going to have to use my other charts here. But with regard to a profile standpoint, we can see the price is trading below the bottom of its daily, which is 166.17, below the weekly, 166.73. But what it did on this pullback was it traded right into support. And support was the top of that weekly box out here. That weekly box was looks like 159.70 out here. So as long as price stays above that, then you may have that signal right here, right now. What you would get and what you would need to see, Ken, and I know what your time frame horizon is. If you're a long-term time frame horizon, the mere fact that price came down to support, below support, it's back above it right now, is a bullish signal. You would not want to see it close below yesterday's low, though. So that's the key. Now, yesterday was a nice, big, bullish engulfing candle. John in New York was asking about a bearish engulfing candle. If you look on that daily chart and you take a look at that big bar out there, that big green bar, that was a bullish candle. So what I'm going to do here is I'm going to go try to find another chart. Give me a moment here to go ahead and pull that up. First, I've got to find it. Where would I have put that? And what we're going to look at is see if there's any other signals inside of Apple, AAPL. So give me a second for this to post up here, and you'll be able to see that big bullish engulfing candle. So this is a cool chart. I'll post it here in a moment. Just wanted to just fill in just a couple of blanks out here before we go ahead and post it into the den. So here we go. So here's the chart from Stevie's Ninja Trader software, and an area of resistance. So Ken, it depends on how aggressive of a trader you are. What Apple has is a falling price oscillator below zero. The very bottom panel of that screen is at minus 1.88. So that tells us that our price oscillator is below zero. We've got Stevie's red line. Always can act. It's a resistance level. When resistance gets crossed, then all of a sudden it becomes support. Right now, what you and I know is it's resistance. So 166.26. You're at 161. Again, I don't know your time frame horizon. Maybe you want to wait till price crosses over 166.26. Now that number's going to change from day to day, but this would be the level. So a couple different ways for you to take a look at it, Ken. Maybe you take a small portion now. Maybe you add to that portion when it gets to above Stevie's red line. Take a look at those past profile levels, those bottoms of the boxes on the daily and the weekly out there. So that's how I would trade Apple. That's what the message of Apple is as we speak right now. So Ken in Wyoming, great to hear from you. Thanks so much for sending in that email request, and I hope that helps you out. We're going to check here to see if there's any other requests. I don't see any other requests there. I'm going to check the Tiger's Den, and we're going to go to breakout there, which means in just about 20 seconds. But, Danny in Atlanta wants to take a look at the euro. So we'll go take a look at the euro. I'll have all the charts set up when we get back from breakout here. Right now, as we take a look at the markets, let me see where we're at. We've got the, where is it? The S&P is up about 6. The NASDAQ is down 33, about 0.5%. The Dow's up 139. Russell is up 3.5 points. It's so fun to go out and take a look at what the signals are inside these charts, isn't it? The one that we looked at says what? You got a major bottom that has just formed. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
We had a request to go take a look at the euro, and what I've done here, what I posted inside the chart that I posted here was the euro futures contract. So we're taking a look at it, and right now we can see that the price is pulled back to a level of support on the daily basis. We're taking a look at the bottom of its CAS market profile. That is at 1.236 or 2. If we go ahead and try to get the exact to the pip out here. And so that's going to be a level of support for you to watch, Danny. If the euro is going to continue to head lower, you're going to need to see price close below that level. If it does close below that level, then what that would tell me is that price should head back to 1.2373. That becomes the next area. That next area, that is the top of the TAS daily profile for the monthly time frame out there. The weekly is not in play as we speak right now. So the two levels to be watching, again, 1.23642, a close below that. Then you see price move down to the 1.22645. If that doesn't hold its support, then you're looking at probably, as we speak right now, about 120, 1.204. So So that is what is going on inside of the euro. I hope that helps you out there. And so let's see, what else is it? What other morsel of information can I provide to you? I'll tell you what. The only morsel of information I think that's left for me to provide to you is if you haven't visited Maui, if you don't know anything or much about the Hawaiian Islands, the best time to come is between January and the end of March. And the reason is because you've got whale season. And what you like to do is come to Maui, stay up in the Kaanapali area or the Wailea area. I prefer the Kaanapali area. And the reason is because you've got this great cluster of islands. It's very calm. It is the play area. It is the aquarium for the humpback whale. And there's nothing that will take you back to nature than sitting on your deck or sitting in a boat and watching those things breach the water. So, folks, I won't be with you tomorrow or Friday, but I'll do my best to be with you from Lanai come Monday morning. Take care, folks. Have a great week, great weekend, and we'll see you next week.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.